Hello traders, welcome back to my YouTube channel. Today's video gonna be a short price action video here on how I framed an intraday trade, looking at this price action here on the Euro USD 5-minute chart. And just by looking at this price here, to some people it doesn't look really much, but we as ICT students know that there's actually a lot of things going on here. So I want to show you that. You can frame your setups on just pure reading price action. When the London session here today set the high of the day and creating some equalize up here, yes, I know that we are in an overall bearish market, but I had a draw on these highs here because I was thinking they looked a little bit too clean. During the London session here, price sold off into this discount price level relative from this low to this high here. So forget about what's to the left here. Even if you see this as a block or if high time frame fair value gap, and that's not going to be important right now. The importance here is just to actually look on what's happening in price. So we know that price is drawing to liquidity and areas of imbalance. When price is trading down into this discount price level here, what I can see is every time price creating a low here, it obviously creates some sort of sell stop pull. And I wanted to see a clear shift to maybe attack those highs here, but this price leg here selling off into this fair value gap here, attacking this high here, this was enough to me to pyramid 3 position in an intraday buy model. This is a 25 pip range, and if I can work inside this range and scale in positions, that's enough to me. And you can see here also that even if we are obviously a high time frame bearish, you can still counter trend intraday and catch a decent amount of pips. But when price is selling off here during the London session, creating lows, I wanted to see a clear shift. That's happened right here. We swept above this old low here and creating a nice displacement up here, a impulsive price leg completing this buy model here above those equal highs here. So I don't want to be a buyer above all highs, so I was waiting for price to retrace down into a discount, and from this low to this high, this is a discount price level. I also found this fair value gap here, also have a bullish breaker here, high, low, higher, high. The thing is also, students to ICT, even if we use the same model or the same concept, so whatever we want to call it, the frame ideas of the setups can still be different. So some students just only gonna use fair value gaps for entry. Some students just gonna use pure market structure. Some's gonna use blocks and stuff like that. That's why I tell you, you must decide for yourself what fills your criteria to frame your setups or ideas. Because it's easy to say, yeah, we just only use the fair value gaps. Well, the reality is it's not that easy sometimes, and here on my channel I try to explain how I see things, and maybe that can help you, or that's my goal. But anyway, my main idea was to think price was drawing up into these highs here. So we're gonna look on a 1 minute time frame and see what's going on inside this swing here, and how we can use this as a Marketmaker buy model. Alright, so 1 minute chart here, and we know a few stuff from the 5 minute time frame, and this was the main shift, or whatever we're gonna call it. Here's also, by the way, the buy model complete I showed you. I knew from the 5 minute chart that I at least got a short time of bullishness intraday, and that's enough for me. When I say short-term bullishness, I don't say that price is going to be bullish for a day or 2 or 3 or something like that. That's not what I'm saying. I'm just saying that it gives me an intraday bullish swing, or whatever you want to call it. So price trading above those relative equal highs here, selling off here, and trades up into the breaker here. And I know from the 5 minute, this low to this high is that 5 minute impulsive price leg. So this sell phase of this Marketmaker buy model, this pullback here, it pulls back into this fair value gap here, and some students just gonna take an entry of this fair value gap alone by itself. I like to confirm my trade, so this could be an example of it. It trades down into this fair value gap. Did we get a reaction? Yes, we have a short-term shift here, comes down into a discount again and sending price higher. So this area down here is the smart money reversal to me to attack this high here. And when I inside this buy model here, and I have a draw at least to this high here, I can scale in positions every time price retracing down into a fair value gap, or give me a market structure confirmation it wants to go higher. So my entries were framed first of all on this 5 minute fair value gap higher, retracing into a discount and sending price higher. And if you look closer here, you have a short little swing high here, and it pierces it just there, comes down into this down close candle here and takes off. That was my entry of this position, and this one was just purely of a fair value gap created. So this is an idea of how you can frame setups intraday. As you can see, Marketmaker models gonna be everywhere in price. It's just a matter of how you see them, and just by looking at this piece of price action here, I can see a lot of Marketmaker models. I don't say that everyone is tradable. I don't say I can trade every one of them. That's not what I'm saying. I'm just saying that you can frame ideas intraday pretty much however you want. Just find your way to frame them. And I think that was all for today, and I hope this video help you at least a little bit about reading price, and I see you next time.